The stock market's in a period of big swings. Let's bring in Joe Tigay of Equity Armor Investments. Joe, last week on the show, you clued investors in about the high yield on 2-year treasuries, giving people a wonderful return on their investment.
Well, there's no question about that. Yeah, last week we brought up the fact that the 2-year yields were up at 5%. And that happened to be the high. And maybe that triggered something in the regional banking sector, because that was a point where we might have saw some of those banks start to take some losses. And that kind of hit a tripwire. We saw people start to take some money out. And of course, we know what happened after that. And now we're sitting here a week later. Some of those banks have been taken over. All of that money has been guaranteed. So maybe there is some liquidity coming into the market. Then we get news about Credit Suisse. They're having their own troubles. Europe doesn't look so great also. So there's plenty of volatility. It's all centered around the banking sector. And now in the meantime, the market's going ahead of the Fed and saying, well, because of this banking crisis, rates are going to have to come down. Good news for that case would be that inflation wasn't out of control this week. However, the Fed still has a lot of work ahead of them. We still haven't seen them get ahead of the housing market. The Fed would really like to see the housing market start to flatten out or turn south and really start to see the wage growth and unemployment start to rise to make sure we get this inflation back down to this 3 or 2% target they'd like to see.
Tell us more about what's happening with the 2-year treasury now.
So yeah, we saw the 2-year treasury top out at 5%, came all the way back down to almost 4% yield. Now, as on Wednesday, it was back up at around 4.2%. So yeah, this is good for some growth stocks, from tech stocks. The 5% yield was really bad for a lot of regional banks that were holding some losses on some treasuries that they had bought previously. Going forward, some of those losses for the banks at a lower yield are not as bad, but they still are significant and still runs into that risk of needing to liquidate them should we start to see more clients, more customers get out of their banks, move to the bigger banks. And also, we're going to see some competition for these assets. Banks are going to be raising their money market funds, trying to keep their assets on their balance sheets because they need to keep the money there. And so we might be a struggle ahead for banks. Might be a tough couple of quarters, even a couple of years for banks. However, hopefully we're going to get past this time of crisis for the banking sector, and maybe the rest of the market can do well. But certainly it's tough for the banking sector, to say the least.
Still, that's good for investors looking for yield.
Yeah, it's good. It's good for investors looking for some yield. Maybe it was better last week at 5%. Still 4% is a lot higher than it was just a year ago.
Excellent. Thanks so much, Joe.
Thank you.
Go to businessfirstam.com for where to see our show on TV.